I'm going to oversimplify the Townsville Energy Chemical Hub project, and that is as follows. Ore plus gas fed through a clean processing plant equals clean battery minerals and metals production and profitability. So until now, the main missing agreement has been the gas, and today we announce that cure. We've been working on the acquisition of the Moranbah Project for over a year. Those efforts have been led by Dave Ratch, who I'll introduce shortly. Dave has a long and successful history in gas supply from such sources. But first, this significant commercial and de-risking acquisition comes on the back of an agreement we signed yesterday with a consortium of German equipment and technology suppliers who we've been working with for well over a year, where they'll work with us towards performance guarantees on all of the core equipment in our plant from existing commercial designs and know-how. And that comes with steak knives, because yesterday we also announced that the German export credit agency Uli Hermes and KfW IPEX Bank are joining the tech project to provide a conditional $500 million of debt funding. So combined with what we've already achieved, the path to debt funding seems clear. But back to today's announcement and the man of the moment. We established QPM Energy a year ago, and Dave Ratch is the GM in charge of that subsidiary. He has a large team of people with a lot of experience in this area, who, as I've said, have been working for a long time towards this acquisition. Investors may not have been aware of what was happening behind the scenes, but today we announced the culmination of a great deal of hard work that has gone into substantially de-risking the QPM tech project. So I'll hand over to Dave, who will introduce himself and talk through the acquisition. Thank you, Dave.
Yeah, thanks, Stephen. And look, it's a pretty significant moment for us here at QPM and QPM Energy. This acquisition is something, as Stephen said, we've been working on for some time, and investors may be aware that part of our gas supply strategy for the tech project is to build a supply portfolio that accesses gas that's plentiful and available in the Northern Bowen Basin area. And this acquisition that we're discussing today is a foundational part of that strategy. Before I dive into the presentation, I might just sort of address one of the questions that's come up pretty frequently already today, and that is kind of, doesn't this deal look too good to be true? You know, it's kind of, we're getting paid here to take on this asset, and how could that be? I just wanted to sort of hopefully articulate a short answer to that initially, and then I think that will hopefully become more evident as we work our way through the presentation. But QPM is actually uniquely positioned to acquire this asset simply because of its ability to integrate its energy supply chain, and that provides an opportunity to give this asset, the Moranbah Gas Project, a long life, which it otherwise would not have. We also have the ability to interact with coal mine operators in the area, which again we've talked about this over the past few months, to access gas that they are producing in as part of their mining processes, and use the Moranbah Gas Project itself to capture and collect and then use that gas beneficially initially through the Townsville power station, and then into and through the tech refinery as it gets established in a couple of years' time. So we think we're uniquely positioned to take this asset on and reinvigorate it and build it. The vendors at the time through this process have been very keen to secure a clean exit, and we've been able to provide that through the way the deal has been structured and the commercial terms that have been agreed. So we think it's a good deal for QPM and QPM Energy. And what I might do now is just talk a little bit more specifically about the asset that we have agreed to purchase, and some of the strategic drivers of that acquisition. So the base or the core of the asset is quite a large reserve base. It has the asset currently has 240 petajoules of 2P reserves certified by Netherlands Soul. It has a very large resource base, 2C resource base of about 269 petajoules. We think that resource base, some of that resource base can be upgraded to reserves as we establish a long-term plan for the development of those contingent resources, because the contingent nature of those resources is the fact that the current owners of the project haven't had a long-term plan for those resources, which the tech project provides. So we are again uniquely positioned to quite quickly, we think, upgrade and add to the reserve base here by converting some of the contingent resource to reserves. The project has been in operation for almost 20 years. There's about 100 or so producing wells currently. It's currently producing around 10 to 12 petajoules of gas per annum. And the project, one of the key assets, we believe, is that there's a very extensive infrastructure network that's been developed to gather gas and water, manage the water and process and compress the gas and deliver it to customers, being Dyno's ammonium nitrate facility in Moranbah, and also into the North Queensland gas pipeline to the Townsville power station. Those facilities and infrastructure currently is underutilised and has a very significant capacity to take production up to around 64 terajoules a day, or around 23, 24 petajoules per annum, substantially above, almost doubling the current capacity of the project. That's a very significant opportunity for us and provides the pathway to develop the reserves and production sufficiently to supply the tech project from 2026, 2027 and on. So it's a very valuable asset for QPM. Very importantly, the asset is also critical in QPM's carbon abatement strategy, which we've previously articulated. The infrastructure that the project has is already directly connected to 5 operating coal mines and receiving gas that is being produced as a byproduct of mining operations from those mines. And we believe there is very significant opportunity to add additional mines and production, both waste mine gas production, to the system, given the excess capacity that's currently available. So a very clear focus for us over coming months and years is to ensure that the facilities that we operate are open access for and will be able to accept gas from mining operators who are in the vicinity of the Moranbah area. The asset also comes with a series of important contracts. One is with respect to the rights to generate electricity through the Townsville power station. The power station is actually owned by Ratch, but we have this contract will give us 100% of the capacity of that power station. And it also comes with a contract to transport gas from Moranbah to Townsville, about a couple hundred K, and utilise a significant volume of storage in the North Queensland gas pipeline. That's again a very important asset because it gives us the ability to manage variable gas supply, which often is the case with mine waste gas in particular, but also use the storage in the pipeline and the power station to target peak electricity market pricing and run the power station to ensure that we're providing power when the market needs it. And typically in North Queensland, that's in the late afternoon, early evening periods. And we might talk a little bit more about that later in the presentation. This group of assets are operating. They're currently generating a significant revenue flow based on supply of gas to Dyno's ammonium nitrate plant in Moranbah, as well as revenues from electricity generation through the Townsville power station. As part of the acquisition, we have been working with Incitec Pivot, and we are in advanced negotiations with them around extending the gas supply agreement beyond its current term, and also some potential funding support to help us further develop the Moranbah project itself. And you'll note that Incitec have announced that today as well. The strategic rationale for this acquisition from QPM's perspective is quite critical. Clearly, the Teck project is a large energy user, and at full production will be, I think, the largest industrial user of gas in Queensland, of around 14 petajoules per annum. The existing reserves, and certainly the existing reserves, and certainly with the resource conversion that we believe is possible, will underpin that gas supply for the first 10 plus years of the project's life. So it's very, very significant, because I think, as Steve had mentioned earlier, it's a fundamental aspect of the project, and it provides a vertically integrated energy supply chain for the Teck project. So we believe we've significantly de-risked the Teck project through this acquisition, and by enabling a foundation reserve to be available for the project's energy requirements. It's very critical also in delivering on our intent to be carbon negative, and we do that through abating gas from mining areas in the Northern Bowen Basin that would otherwise, or is currently, being flared or vented directly from mining leases. So by providing a pathway for that gas to be collected, gathered, captured, processed, compressed, and transported to Townsville through the Teck project, means that those emissions are fully abated at the mining, in the miners' hands. And the gas is absolutely used for a beneficial purpose, which is to produce critical EV metals, battery metals. We think this is, very, very positive for the Teck project, but also it's completely in line with the federal government's safeguard mechanism reforms that have recently passed. And we think this is a great example of industry just getting together and solving that problem in a really constructive and positive manner. There is the ability to generate significant revenues from electricity generation, as I've already mentioned, and that power station with its capacity rights give us incredible flex around managing some variability in gas supply, but also gives us, together with the storage in the pipeline, the ability to be a very, very active participant in the peaking electricity market. And we believe, and I think a lot of the commentary currently sort of is along the lines that gas is needed as a critical element of firming for renewables. And given the very, very significant renewable development pipeline, particularly in North Queensland, we believe that having this gas firming capacity, or gas-fired power station firming capacity, will be a very, very valuable asset, in the short and medium, and potentially in the long term. So we believe this transaction ticks a lot of the boxes for us, for QPM, and it will actually transform QPM into a revenue-generating company from completion, and it will help to generate positive cash flows during the construction and development of the Teck project itself. Perhaps just turning a little bit to the details of the transaction itself. The sellers of the asset group of assets is a joint venture, or the joint venture is currently 50% Arrow Energy and 50% AGL. Arrow Energy is a private company which is itself 50% owned by Shell and 50% owned by PetroChina. We will acquire, or QPM Energy will acquire 100% of the group of assets that we've already talked through. The consideration will be an upfront payment of $5 million to the vendors for that. However, QPME will receive a $35 million payment from the sellers, and that's really based around us being QPME taking on obligations to supply gas under existing contracts. We'll also there is a significant warehouse and inventory that is available that we will access in Moranbah that goes with the field itself and the spares and so on that are required to maintain and operate the field. There's a series of conditions precedent for completion, which are fairly standard for a transaction like this. There are a couple of key consents that are required for various contracts. IPL with their gas supply agreement for their Moranbah ammonium nitrate hub, Ratch with the power station, Partnersh, who own the North Queensland gas pipeline, all need to consent to assignment of those contracts. And critically, the Queensland government is required to give ministerial consent for the transfer of the various petroleum licences across to QPME. All of those consents are well in hand, and we've been working on those in the background as we've approached this moment. So I guess perhaps talking a little bit more around why we've been able to achieve this outcome. And I think there's a couple of reasons. The first is that the asset for the current owners has become a non-core asset for them. Certainly the Arrow itself is focused its efforts pretty substantially now on developing the Surat Basin, and has this asset, the Moranbah asset, has taken a bit of a back seat. It's key for us because we think we are uniquely positioned to unlock value here because of the ability to deliver a long-term offtake, which not many other parties in this space could offer. And we also believe we have an approach to deliver a fit-for-purpose operating basis and really significantly improve both the operating performance of the field and the cost structure of the field, which has suffered a little bit from being part of a very large and significant organisation and the overhead and so on that has accrued with that. As I've mentioned before, there's the commercials around the acquisition price and the consideration reflect some of the historical contracts that are in place, but also reflect the fact that we are taking on, operating the project on a walk-in, walk-out basis, and AGL and the Arrow partners are clearly desiring a clean exit, which we will give them, and that's the basis for the commercial arrangements. We're very comfortable with the asset itself. We think there is substantial upside. There's a good team in place who are currently operating the asset, very experienced, and we believe with some real focus and attention and just good operating practice, we will be able to significantly reduce the operating costs of the project and also its production performance. Very quickly, there are a number of recent transactions, benchmarks around for gas assets. You can see that this particular asset sits very much at the lower end of that spectrum. We believe that the kind of issues that have beset the asset are capable of resolution, and we are uniquely positioned to do that. So we think there's a very substantial re-rating possible here. Just potentially just talking a little bit more in terms of the location of the asset and how it fits together. So the Moranbah Project is located at Moranbah, which is about 200 kilometres inland from Mackay in Queensland. There is a pipeline called the North Queensland Gas Pipeline that connects the project directly to Townsville, to the Townsville power station, and also to another end user being the copper refinery, which is Glencore's Mount Isa copper refinery that's based in Townsville. QPM's Tech project is currently to be located just south of Townsville, as you can see on the map there, and it is literally right on the gas pipeline, so it will be very easy to produce an offtake point, delivery point right into the existing Tech project compound. On the map on the right-hand side there just shows the location of the Moranbah project itself. with respect to a whole bunch of very significant high-grade or premium-grade metallurgical coking coal mines, running from Wardswell in the north through North Goonyella, the Goonyella's BMC's Goonyella Riverside operation, Anglo's underground mining operations at Moranbah North, Grosvenor, and now Teviot Brook, across to Stanmore's Isaac Plains complex. Carbra Downs is run by Fitzroy Resources, Ironbark by Fitzroy, and so on. So it's right in the Moranbah project itself is located right in the centre of a very significant mining hub in North Queensland, and this is probably one of the key sources of premium hard coking coals. And the geological conditions that produce these coals are also the conditions that have produced substantial volumes of gas. So as these mines are all getting deeper, they're mining into much higher mining into coals with much higher gas contents, and it's now becoming a critical part of the mining process to deal with gas. And we've seen that through, unfortunately, there's been some very serious incidents at both Grosvenor and the North Goonyella mine in recent years. And of course, combined with the safeguard mechanism reforms, it means that all of these mines will need to be and are actively focusing on ways they can significantly reduce their carbon emissions. And of course, the Moranbah project is the ideal way for that gas to be captured, transported off the relevant mining leases and taken to Townsville, supplied into the diammonium nitrate facility, and also up to the Townsville market for either electricity generation and ultimately for the tech project. This slide is a super busy slide, and it's meant just to highlight the range of assets that are being acquired, but there's a significant infield gathering system and compression system which picks up gas and water from 100-odd wells, brings it all to a central compression station that has about a 64 terajoule a day capacity, which was linked directly to Townsville through the North Queensland gas pipeline. There is also a connection to the facility. Where are we going? Okay, so I guess just looking historically, the project's been running over the last few years at around 10 to 11 petajoules of gas a year. It's interesting that there's been an increase in throughput through the project over the last 6 to 9 months, and that's been driven predominantly by increased gas flows from mining operations that are connected into the system. So as those mines are becoming more active and starting to need to degas their mining operations well in advance of actual mining, we're seeing that gas starting to come through the system, and we believe there's a significant opportunity to accelerate the connection of additional sources of supply, plus an opportunity to drill a number of infill wells in and around the existing field to access pockets of gas that have not been adequately drained to date. Just for example, it was only 2 years ago that the project drilled its best ever well, produced up to 4 terajoules of gas a day, or 4 million cubic feet a day, in an area that had been drained for the last 15 years. So there is substantial volumes of gas still available in the field, and very productive wells that can still be drilled. Existing customers, as I mentioned previously, Incitec Pivot through their ammonium nitrate facility take about 7 petajoules a year. That contract continues on through to March 26, and we're in advanced negotiations with respect to extending that contract and continuing to supply that facility for the medium term. Ratch Australia own the Townsville Power Station. We have a contract, or the acquisition comes with a contract to dispatch and manage 100% of the capacity of that power station, and we're intending to continue to operate that as a peaking power station, but operate it in a more efficient manner, and I'll just talk to that in a sec. There is a small gas supply contract in place with Glencore for their copper refinery CRL facility. Just turning to our arrangements with Incitec Pivot. So we're in advanced negotiations regarding extension of the gas supply for that key facility. And part of that is is an intent to help fund the development of the field to support and underpin that supply for the medium term. The Townsville Power Station is an interesting asset. It can run as much gas as we can give it effectively. And the challenge is for us to, from the project's perspective, to provide gas on a ratable basis into the pipeline. And then we can use the pipeline to store gas so that we can run the power station as and when power markets require. So just to give you an idea, if we're able to run or supply 11 terajoules of gas a day into the pipeline, we can run the power station about 7.5 hours a day, Monday to Friday, in the Monday to Friday afternoon peak, and that will generate about 430,000 megawatt hours of electricity a year. So if you then have a look at what is that worth from a revenue perspective, these charts show recent pricing over the last year or so, and you can see that the blue period there is the target peak period that we would be running this power station in, and you can have a look at the various prices that are achieved during that period, and you can, just by eyeballing it, you can kind of see that from about 5 o'clock in the afternoon through to about midnight, so that seven or so hour period, kind of you're looking around the $200 a megawatt hour for that 430,000 megawatts that you're generating. So we think there is significant electricity revenue potential with this asset on top of the revenues that we receive from the dyno sales. Just finally, a statement with respect to reserves. There's about 240 petajoules, and I think it's very important to note that we think a substantial portion of the contingent resources can be upgraded as we define our longer-term field development plans, which we will be doing in coming months. Okay, I think that's it. Thank you very much.